Thank you. Funding for this program is also provided by.
There is some background.
I just
Okay.
muted John. He had something on.
Thank you.
Uh-huh.
All right, video is going. And David, if you're welcoming people, you are on mute.
I saw a few. I saw Mark Lundholm in his Darth Sith outfit. He has the black sweater and the hood. He's ready for this meeting. We need to have like a costume night for this. We got to do the October meeting. When we do that, we got to, next October, we'll have to do a Halloween thing.
Right. And I thought I saw Chuck Nielsen join, and I think I saw Ori jump in there. And I see Jeannie. Oh, and there's Merritt. Hey, Merritt. People are joining us from around the area.
Carrie
This is great.
Shugan, yep.
Excellent. All right, Carl, if you would like to kick this thing off, please do.
Actually, I'll let David, because I'll let him share the presentation and do the initial why we do this thing. So welcome everybody to the December meeting of the Fiscal and Economic Issues team of NWSOFA, a indivisible organization. David's still muted, so that's a problem.
I'm not allowed to share presently. Sharing has to be turned on for me to share my screen.
See if you can do it now. I just okayed it.
Excellent. And Bill, can you see that?
Yes, I can. Thank you.
I can see it, yes.
Let me put it in the right mode here. Okay. So Carl, would you like to start, or would you like to give me the intro? Have me do the intro?
I'll let you do the intro here, the
right.
first couple of slides.
Good. So welcome to the December meeting of the Fiscal and Economics Group of the Northwest Suburbs Organizing for Action. We go through a presentation, and at the end of each section, we stop and we encourage you to ask lots of questions, and we talk back during that time. And please feel free to put information or questions into the chat, and we will address those as well as we go. The point of all this is we want to make sure you guys have a really good factual understanding of what's going on, because there is so much misinformation that's shared out there. So we make sure that you have it from the best sources. So the Bureau of Labor Statistics, the Federal Reserve. We'll get commentary from some of the mainstream media pieces too, but for the most part, you'll see data right from the Federal Reserve or the Bureau of Labor Statistics, for example, or the Bureau of Economic Analysis. So you have the official data, and then the commentary typically from those organizations or the Congressional Budget Office. All right. So tonight we have a standard economic overview. We go through the labor market. We had the new jobs report today that came out. We've got all that reflected in here. And that was the October and November jobs report, because they had delayed it because of the shutdown. So we'll go through that information with you and explain all that. We'll go through a tariff update. So you can catch up on the latest with the tariffs. Household finances, so you know what's going on with inflation and wages and net worth. And then we'll have a special section on artificial intelligence. We're going to go into detail on kind of how these companies are competing. When you hear in the news that the economy is being driven by AI-related investment, we're going to talk about that piece. So kind of a bit wonky, but a fairly thorough discussion of what's going on in the AI competitive space and how that interacts with the economy right now and some of the financial risks that are coming with it. Carl, are you ready to go?
Sure. Obviously, some of the things that are going well, the stock market overall for the year since Trump was inaugurated is up. Wages are up through September by more than prices are up. Last year, we had a record real median household income, and we're hoping that that continues into this year. We're not sure. We won't get that reported until next fall. And we've got a near record real net worth in the second quarter for the bottom 50% and most other groups. Not so well. Unemployment is up to 4.6%. That's up 0.6% from January. Job creation is pretty stagnant. Immigration restrictions, firing of federal workers, retiring boomers, lots of things are contributing to the fact that job creation is pretty stagnant. Fed's preferred inflation measure, PCE, is at 2.8%, was at 2.8% in September. That won't be updated until later this month, versus a 2% target. So that's not a good thing. And we're getting very mixed GDP signals, and we're going to get third quarter GDP, which would normally have come out the end of October, will come out later this month. I forget, is it 23rd, something like that? But in any case. And so how is the Republican plan working for us? Basically, if you're in the top 10%, you love the so-called one big beautiful bill. If you're not in the top 10%, you don't love it. We see that people in the bottom, this is a combination of the one big beautiful bill and the tariffs, and people in the bottom 10% are getting hit hard. But people all the way up through $100,000 in income are getting hit by $1,000 a year. So it's not looking good for most of us. And this does not include the increased cost of health insurance that was the fight for the shutdown that's still unresolved, but we're currently opting on a continuing resolution, and it does not look positive to get the subsidies, the enhanced subsidies extended into 2026. So all of these things, for most people, it's not good. Fed has modified its forecast. My screen is disappearing on me, but that's okay.
Just a little. I'm not sure. I got a problem with my teeth, man. Oh well. All
So
right,
anyhow,
I got another conference.
basically,
Not headphones on. You do it all.
This amazing 11-month journey that I document of Susie.
okay. So the real GDP growth rate is forecast to be up a little bit, down in 2025, up a little bit in 2026. Unemployment rate is projected to be higher through 2026. The core PCE inflation is projected to be higher through 2026 and 2027. And the Fed funds interest rate, it was projected to be a little lower in 2025, but about the same in 2026 and 2027. And as David talked about, there was a employment report that came out at 7:30 this morning, which we've attempted to incorporate in here. It included, Lordy. Now I'm getting Zoom problems. But anyhow, it included payroll employment for both October and November, the establishment survey. It included the household survey for November, which is the unemployment rate and other things, and the other household survey metrics. So we got some data, just not a lot, and sometime next year, assuming we don't have another shutdown, the government data should catch up with the traditional calendar. We've got a JOLTS report. I've got Zoom wanting me to join again, so trying to stop that. In case, we're going to get an inflation report on Thursday. As I guessed correctly, the third quarter GDP report, which would typically come out in the last week of October, is going to come out on December 23rd. And the editorial comment is there is no evidence these figures are not reliable any more than they normally are. Does not appear that the Trump administration is cooking those numbers to any great extent, as indicated by today's wonderful data. So we've got the labor market we're going to talk about. This is probably, the monthly employment reports are probably the most important economic news release. Historically, 100 to 150,000 jobs added indicated a steady as she goes economy. There's questions whether we need that many these days, given that the number of people in the workforce does not appear to be growing based on people retiring, people getting deported, et cetera. So the jobs figures, or the payroll jobs figures, are based upon the giant establishment survey of employers, which and says we have about 160 million people have jobs. That does not include self-employed people. Okay, so we right now have about 7.3 million jobs above the pre-pandemic peak back in 2020. Jobs grew on a net basis, reported to have grown on a net basis by 64,000 in November. So that's a positive sign. Jobs shrunk in the prior month, in October. Next slide. Okay, next slide, David. What we see here is that job numbers have been up and down throughout the year, and no overall trend up. April was a good month, May was not, June was not, July was mediocre, August was negative, September was positive, October was a big negative, and November. So our 3-month average is only 22,000 jobs, which is not good. Payroll jobs averaging 40,000 per month since April. And the Fed chairman thinks that there was a overstatement in those numbers. So that could be a negative 20,000 per month. And we'll see what, typically these will get revised sometime next year. And at that point, we'll see where we ended up. It does take a while because ultimately they check the payroll jobs numbers against unemployment insurance tax returns. Companies have to pay unemployment taxes on their employees. and they report how many employees they have. But those don't get consolidated until sometime next year. And so we talked about we've regained the pre-pandemic level of jobs. And we had Obama's second term had decent job creation. It was ahead of what Trump was doing prior to the pandemic. And including the pandemic, we actually lost jobs under Trump. We recovered jobs under Biden. We started to recover jobs under Trump towards the end. We recovered jobs under Biden. And even after we got to the pre-pandemic level of jobs, we still continued to add a large number of jobs under Biden. But under Trump, as you see, we have fairly low job creation. And we can see where jobs have been added and lost. Construction's up, manufacturing's down, retail trade is up, transportation's down, private education, health services are up. And a big one, government is down. We lost 162,000 federal government jobs in October. That was the big DOGE cuts, where they offered people to go ahead and they continue to be paid through the end of the fiscal year, the end of September. But then they were cut off and they were showed as employed, even though they weren't working. So that 162,000 hit in October. And so now we see that the number of federal employees is down substantially since the beginning of the year, after having gone up substantially under Biden. And so right now, the share of federal workers to total jobs is historically low. The peaks you see around the 2000, 2010, 2020, we have a bunch of temporary census workers every time we do a census. So that's what those peaks are. Now, the unemployment rate tells us what percentage of the labor force is not working by certain definitions. Historical average is about 5.7% for data all the way back to 1948. Based upon the household survey, about 50 to 60,000 households surveyed every month. There's a historical point for unemployment below which inflation accelerates. Estimates for that vary. Fed probably doesn't want unemployment much below 4% currently. It was 3.6% on average back in 22-23. The definition of unemployment under the widely reported U3 rate is someone who did not work during the month, actively looked for work during the month, and is available for work. And so the unemployment rate is the number of people unemployed divided by the total labor force, which is people who are unemployed plus the people who are employed. And so the unemployment rate is historically low but rising. And we see that it was low towards the end of Trump's third year before the pandemic caused it to explode. So Trump started his first term with an unemployment rate of 4.7%. And when he left, it was up to 6.4%. Biden started with that 6.4%, and when he left, it was about 4%. And so we see that officially it's reported up 0.2% for September. Actually, it was up a little bit more than 1% from 4.44 to 4.56. 4.44 rounded down to 4.4, and the 4.56 rounded up to 4.6. But it's consistent with, other than Reagan, every other Republican president has seen the unemployment rate grow during his term. Great track record. That's why we like Republicans on the economy. Not. These are unemployment rates recently. We see it actually was coming down under, under Trump. It had been coming down under Obama. Continued to come down under Trump. And then it continued to go down under Biden, although it's come up a little bit in the last year or so. Last 2 years, counting the Trump years. And this is just the household survey. This is taking 3 months from September to November, September, October, November. And we see that the population grew, the labor force grew, participation rate grew, the number of people employed grew, the employment to population ratio is basically flat, the number of people unemployed grew, the unemployment rate grew a little bit. We talked about from 4.44 to 4.56, and the people dropping out of the labor force grew a little bit. Not terrible numbers, but not great. Especially the unemployment rate starting to go up, or continuing to go up. If it continues to go up more, that's going to continue to be a problem. And as we note, the household survey employment of 100, this is down in the bottom right, household survey employment of 164 million is bigger than the payroll establishment survey's payroll jobs of 160 million. Is it 99 workers, your Uber and Lyft drivers, your Grubhub delivery folks, etc. All right. Next slide. Interestingly, the number of people working part-time for economic reasons appeared to jump in the November numbers versus September numbers. And it's unclear whether this is an anomaly or part of a bad trend. But given that we were in the middle of a shutdown during this time, it may well have been just an anomaly due to the shutdown. We had a number of federal employees that were laid off, and the best a lot of them could do was find some part-time work. And employment to population ratio of prime age workers, which is 25 to 54, which is trying to exclude students and retirees. And basically has been relatively flat since it dove down during the pandemic. It recovered after the pandemic. So by the middle of 2022, it was back up to where it had been historically. and it's been basically running fairly constant since then. And job openings to unemployed, basically hit a record 2.0 back in March of 2022, now about 1.0. So there's about one job opening for every unemployed person. That doesn't mean that every unemployed person is having an easy time finding a job. Okay, so do we have questions in the chat or otherwise about the labor market?
You have quite a few questions, I believe.
We do. We have several. I can address some of these. The statistics are not being faked. You can trust these statistics. And we've said before, we'll let you know if economists that I follow on Twitter are watching this very carefully. If they start to say they don't believe the numbers, we'll let you know. But they look pretty reasonable. There's some comments about how expensive things have gotten, and yes, they have. If you go, and we'll cover that, how much things have gone up since before the pandemic, but wages have gone up even more, which we'll go through. All the different groups are better off now than they were back before the pandemic, although people don't like to believe that, and there's a lot of noise in the media against that. This whole affordability question, we'll talk about that when we get into the household finances section. There's something about the November increase in jobs seasonally adjusted. The numbers we're sharing are the seasonally adjusted jobs. And so if there's going to be something unusual, it would be in the not seasonally adjusted, where you've got all the holiday employees that are hired and then let go. Those are adjusted for in the numbers that we share. So you shouldn't see a big jump in January for the most part in the numbers. Where you will see it is in the census. When there's a census added, that's enough employees to throw off some of these. They don't seasonally adjust very well for a giant increase in census employees. Yes, there was a drop of 165,000 federal jobs. I think we covered that pretty thoroughly. So the October number was bad. There was really no net job creation. And let me go back up a second. When you look here, here's kind of the story of what's happening. The September to October time period, you had no net job creation, basically zero during that time, and you had a negative in August. So we haven't had much job creation really since the tariff announcement in April. Ever since then, things have been pretty flat. You've got very, very slow job creation, and the latest 3-month average is only 22,000. We mentioned that at least in the past, good job creation was 150,000 plus. In this world now we're in, where there's no immigration and lots of boomers are retiring, it's a little bit easier for the unemployment rate to hold steady, even with very low job creation. And so economists are trying to figure out exactly what that is. But you can see here that this level is not enough to keep the unemployment rate from going up, but it isn't going up super fast. It's not jumping like crazy in the last few months, September, October, November. As Carl pointed out, if you take out the rounding, it really didn't move that far. And some of that's because of this aging demographics and the reduced number of immigrants that are coming in. You just don't have the big increase in the labor force or the number of people that are working. Some questions about the CPI. We'll get to that in inflation. Recession may be coming, possible. We'll see. We'll let you know. We're going to get a GDP report pretty soon, which by all accounts is supposed to be very strong. And so we'll see that, if you have very strong GDP and very low job creation, that means the output per employee, the productivity is jumping. And we'll see why that is, or if there's some other distortions in those numbers, that we'll get into that artificial intelligence piece, where there's just a ton of artificial and AI investment going on, building data centers, building systems, all this sort of, IT related infrastructure that's being built and is really driving a surprising amount of the economy right now. And a lot of it is built on debt. So we'll talk about that. Someone's got a husband whining for attention, which is fairly typical. I do that often, so I apologize for on behalf of other husbands, but that's what we do. And I think that's it for the questions in this section. Yep.
There's no indication that there's a big skewing of the numbers by the Trump administration.
Right.
But there's too many, bureaucrats that would scream if the Trump administration tried to skew the numbers.
And we've got Wall Street on our side in terms of trying to make those numbers accurate. They want the numbers. They want to know this stuff so that they can do what they do. And so if we were worried about the government messing with that data, Wall Street doesn't want that to happen. There's a lot of big money that doesn't want anybody playing with the numbers. And I think, one of Trump's replacement picks for the Bureau of Labor Statistics was that he put forward initially, got rejected. And I don't know if they filled, I don't think, Carl, they haven't filled that job yet, right? It's still open.
I don't think they did.
So
I don't think that there's a new appointee.
Yep. So again, we do this update every month. If we start to see indications that something is off, we'll raise our hand. Carl mentioned that there may be some stuff that's a little just statistically difficult that's to do well that may have thrown off this number plus the shutdown. So we'll see if this number bounces back down for the part-time. But that tells you that it's just another indicator that the job market is softening and that you've got a lot more people working part-time. They would like to be working full-time. When that number is going up suddenly, that indicates that some things may be weakening. And that's part of why the Federal Reserve has been lowering interest rates. Some people want them to raise them because of inflation or hold steady. And they're like, no, we're worried about the labor market. And that's where they're focused. All right, Carl, you want to continue with tariffs?
What the heck? I'll let you take those. You're probably a little bit more knowledgeable than I am, but
all right. Fair enough. If you want to jump back in for household finances, you know all this stuff. All right. So tariff collections are running at about 270 billion a year, which is a lot. They used to be under 100 billion a year. And this isn't the amount in the quarter. This is annualized. So somewhere around 300 billion a year. Tariffs are taxes. That is a tax increase on the American people. And Trump was crowing the other day about how the budget deficit is falling or will fall, and his Treasury Secretary as well. And yeah, when you raise taxes, the budget deficit falls, heaven forbid, that's not Republican dogma, right? Their idea was if you raise taxes that the world will end and the economy will contract horribly and terrible things will happen. And here's Trump, throwing in 300 billion more in taxes. By the way, this is about $300 billion is like 1% of GDP. And the Social Security shortfall, for example, is like 1.4% of GDP per year over the next 75 years. So the size of the tariffs covers like 2/3 of the Social Security shortfall. If you want to kind of get a thought of how much money that is in terms that actually matter. It's a 1% of GDP is a lot. It's a big tax increase. It's not evenly distributed, as you might imagine. Lots of the very rich people don't spend all their money on necessities or on clothing and other things. They spend it on travel and services. And so even though the dollar hit that the richest 10% takes, more like $4,000 per household, it's a smaller share of the income. It's the first decile, the poor people that need it to buy clothes and essentials are the ones that are taking the bigger hit from this. The Yale Budget Lab does a lot of great work explaining the tariff impact across the economy. I'm not going to read everything on here. It's here for you, but just a few things. Because of tariffs, they expect the unemployment rate to be higher, the payroll employment, the jobs that we just covered, to be lower, price level to be higher. Certain goods that are imported are going to really jump in price. Slower economic growth, meaning slower income growth eventually. Very large increases in revenue. So 2.7 trillion, that's the almost 300 billion a year that I'm talking about. That's a 10-year number. Because there's also a slowdown effect though on the economy. That means there's going to be less revenue raised otherwise. And so somewhere between 2 and 3 trillion is where the Yale Budget Lab tends to estimate we'd end up. And that's about $2,000 a household. That's how much more you're spending because of tariffs. And the overall effective tariff rate is something you don't see every day. You don't pay that, but that's the rate across the board on average for goods. You know, a couple months ago, I bought a $200 jacket from the UK and I paid $50 to DHL to get it out of customs. You know, so it just depends on the item and where it's coming from and all of that. But the tariff rates are much higher than they were before. CBO also just recently updated their estimate for the tariff impact on the deficit, and they lowered it. Mainly because, well, not mainly, but they adjusted how they model this. They've learned some things about how tariffs work and the effect on the deficit and the revenue they're collecting. And they also had just some of the tariffs where Trump backed off some of the tariffs. So that last bullet, 2/3 of the budget deficit was lowered. The estimate was lowered by about $1 trillion. And 2/3 of that revision was from adjustments sort of in their modeling. And then the modifications of tariffs were a big part of the rest of it. So somewhere in that 2 to 3 trillion range, if these tariffs continue for 10 years, you know, Biden continued a lot of the Trump tariffs, much like Obama continued about 80% of the Bush tax cuts. Once this stuff goes in, it does tend to be sticky. It's not easy to reverse them because they have individual political constituents that are loud that will fight for them. So even though it's bad overall, there are different politically connected groups that will fight for it. And, you know, look on the bright side. If you're paying more taxes, if you're somebody that's worried about the budget deficit, I'm not particularly, but if you are, you know, Trump just he added 1% of GDP to revenue every year from his tariffs, you know, and the budget deficit somewhere. We usually get into the budget deficit. We didn't this time, but it's about 6% of GDP. So a 16% reduction in the budget deficit if this continues, roughly. The Fed chair has been very clear that tariffs have raised prices. Trump doesn't want to say that, but there's the highlighted part. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. He's the Fed chair. He said it flat out in the press conference last week, and he said it in a couple different places. Here he said it again. He expects the tariffs to sort of raise the prices one time, and then he hopes to keep interest rates high enough so that inflation doesn't start jumping. But understand that one time doesn't mean it happens overnight. It could take a year or two for that to play out, and then he's hoping that won't, you know, it's sort of, there's a step up in prices. It isn't that the inflation rate is higher, you know, forever. But they're watching. The Fed is more worried about the employment piece right now, and that's why they lowered interest rates just the other day. In streets around the neighborhood where what questions do we have on that piece? Let me take a look at the chat for this section on tariffs.
Well, I think they had to have a reset, and they went back.
David, there's some questions in chat. Do you want us to read those, or can you see those?
Sorry, I was having some trouble getting at my getting at the little guy at the bottom of the screen so I can get there. So I apologize. I was looking here. Let's see. So where is the tariff revenue going? I mean, it goes into a giant pot. It doesn't go into any dedicated thing that's, you know, earmarked for some particular purpose. It just goes into the general fund. along with everything else, it's paid by the U.S. import companies directly and indirectly by people that are paying higher prices because import companies are not going to take a hit to profit forever. We shared some of this information a couple of months back, but somewhere around 50% or so of the costs are being absorbed by just the corporations. They're not passing them along. And then somewhere in the 25% range is going into prices. And then some small portion of this is being taken overseas where they're lowering the prices that they're exporting to us. And so in other words, the price of the goods is not going up, but it's over time. The people that are putting out that analysis, Goldman Sachs, are expecting that 50% to be falling, and that more and more of it is going to be hitting the prices. CBO is the Congressional Budget Office. So they are the gurus of all things analysis, budget, and economics. They are about the most credible source of information you can get. And they're at cbo.gov. There's all kinds of, we share their information all the time, especially when we're talking about the budget. Let's see, what else? So the idea that the tariff revenue would be used to pay down debt versus spending on the military, I mean, it's all in the same pool. So you really can't, say it's one thing or the other. And how do tariffs compare to taxes? They are taxes, but they are applied to importers. The U.S. companies that are importing the goods pay them, and then they have to decide when they pass those costs along or whether they eat it in profits. And U.S. corporations aren't big on letting their profits fall, so it's only a matter of time until they pass through, and we'll see them. I think that covers the questions, but if people want to, this is the time you can also ask a question, meaning you can just come off mute or raise your hand and you'll be recognized and can ask the question.
David, did you see the question regarding the census workers? I think it was right above the question on tariffs.
Census workers. Let's see. I'm not seeing it.
Was that Jeannie Sutton's question?
Yeah. Yes.
Yes.
Jeannie Sutton. I'm looking.
Well, the Census Bureau conducts surveys throughout the time. They just have a big influx of workers for the every 10-year census.
Right. Jeannie has asked, I heard someone on a Zoom mentioning that they had census workers at their home asking extremely invasive questions. Is this normal mid-decade census event, or does this have to do with ICE/immigration investigations?
It's normal.
Okay.
It's a very robust set of questions that people have to answer, but they're usually not. I mean, Carl, are people, you can't just draft people to be part of that. They have to ask you. You're not forced to be part of the BLS stuff, right?
Well, I don't know if this is BLS stuff.
Yeah. Sounds more like ICE stuff.
Well, some percentage of people get a census update, and they have, at least I was threatened if I didn't answer the questions.
Yeah, I've never heard of that, but
But it's only a small percentage of people.
Yeah, I don't know why, because usually it's been a while since we covered their methods in detail, and Carl can help me here, but I think it's like a very large chunk of the people participate in the monthly survey for a while. And they rotate people in and out of that group that they do this with. And so people are they're trained on how to, not exactly trained, but they get used to being asked these questions on a regular basis. So if somebody would show up at your door and start asking you intrusive questions, doesn't make sense from a BLS standpoint. This is
not monthly. This was last year, a mid-year thing. Halfway through the census, they sent me another census form similar to the original census form.
Yeah.
Asking for my income down to $500 ranges or something. And
oh yeah, that doesn't surprise me. They do an annual report on income and poverty that is very detailed, and that's where we have that statistic on the real median household income.
Okay.
Which is interesting that you asked that right now, because here we go. But that's the that number is where they generate this statistic every month, and every year.
Well, but this was strictly, the set was strictly halfway through.
Yeah, I mean, well, they do it during the year, but yeah, it's not going to be.
That may be a different. That's a different one then, probably, because this will be probably less thorough. This was like a more thorough one than halfway through.
Okay.
And what I said when I say threatened, the threat was that if I didn't send it in, somebody would knock on my door and ask the question.
Interesting. Yeah, I've never heard that. I'll have to look into that. Hopefully they aren't coercive. That shouldn't be the case.
Well, I mean, knocking on my door and asking the question, is that coercive? I mean, it depends on your opinion. I mean,
yeah.
They want the numbers. They do the same thing for the decennial census. If you don't fill it in, they'll knock on your door, I believe.
Yeah. Oh.
David, right. Renee has her hand up. Did you want to take that
go ahead.
question?
Yeah, go ahead.
Okay, Renee, go ahead. You can unmute yourself, Renee. Thank you. Oh, hold on. You just remuted. There you go.
Okay. Everybody, thank you. So this is interesting.
Oh, you just remuted yourself. You can unmute.
There I go. There it is.
There you
Get
are.
rid of that. Okay, cool. Hi. Thanks. Thank you. So my question is, I know Costco has sued the administration due to the tariffs, because the tariffs are illegal and Congress didn't impose the tariffs. What happens if Costco prevails? How will that money be returned, and to whom, and how will that affect the economy?
Yeah. All right, good. That's a great question. And I've only done a little bit of looking into this one because I'm waiting for that Supreme Court decision. I've heard different versions of this. So if the Supreme Court isn't just going to overturn all the tariffs that Trump has put in, they're going to overturn, they would, if they're determined to be illegal, they would overturn some of them, but not all of them. Trump also can try to pass them through the Congress, although that's highly unlikely. I think they would need to get past the filibuster. They're not going to get past the filibuster. And it's unlikely that he's going to be able to do it as a reconciliation, where he would get a large number of Republicans to sign up for that, because there's a lot of people that are, people don't like paying taxes. It's going to be hard to get this done if Trump doesn't just do it with executive order. But it's still be determined by the Supreme Court which parts of his authority have to be sort of, what's the word? I'm not a lawyer, but he's doing this under several different authorities, and they may restrict or block one of them, but not the others. So until they do that, and who knows with this Supreme Court, because they do whatever Trump wants, it seems, we don't know how much of that's going to be blocked. Now, if something is blocked, in theory, the government would have to refund it, and they would refund it to the taxpayer, the person that paid the taxes. So the companies that raised their prices and paid the taxes, they'll get the taxes back, but we're all paying the price. We're paying the higher prices, so their profits will look pretty good, right? So yeah, I think they would love to get all the tariff money that they paid back. But as a consumer, we're not there's no legal way that we would get a check unless the government authorizes it through legislation. Trump is already floating the idea of a tariff rebate to people. I'm sure he'll try to do it before the midterms if he can get away with it. Again, that's legislation, or under every other president would be legislation. I'm not aware of any authority he's got to, refund tariffs himself. But, again, we're all on new ground with this Supreme Court. They seem to think that they can do whatever to help the president. So it'll be interesting to see it. But the taxpayer, which is the import company that wrote the check to the government knows who that is. The IRS has the records. It may take them a while to refund it all, but they know who to pay it back to. It just, as consumers, we're not. If we've been paying higher prices for stuff, and we have, there's no way we get it back unless there's some special, law passed by Congress to pay us directly.
That's good.
All
Thank
right,
you.
that's best I can do as not an expert tariff guy, but when the Supreme Court speaks, everybody's going to cover it, and that's when we'll know.
Thank you.
Yep. And I think that's a good point that Nora's making, that it's like June, like the middle of next year is when we're supposed to hear about it. They're not going to opine on that one right away. So yeah, they're going to take their time. So, and Costco might rebate to their members. I mean, that's on Costco what they decide to do. I don't know. I mean, I don't know how Costco is organized, if they are the importer of record for all their stuff, and so they were the ones writing the checks to the government, or if, how that worked. I just don't know if they are the importer. I don't know. I'm curious about that. And the same with Walmart and others, if the retailers are also the importers, but typically I don't think that's the case. All right. Household finances. Let's do a quick run through there, and then we'll take a break. And then the diehards that come back after, we'll go in depth on the AI stuff, which I think is fascinating, but we'll see if you guys do. So the real median household income. Oh, Carl, you want to do this piece? I did the tariffs. You want to talk to this? Up to you.
You go ahead. I'm struggling a little bit with my computer, so
Okay, all right.
go ahead.
The real median household income was at a record level last year, and real means inflation adjusted. So this is the Census Bureau. This is their big annual. And sadly for Biden, we didn't get this news until September of 2025. This stuff lags about 9 months from the end of the year by the time they get all this information and they publish it. It's a great annual report. You can find them on the Census webpage. They talk about income and poverty. There's a healthcare insurance and insurance coverage one, and they have there's a third one I'm not thinking of right now, where it's blended in with what I was talking about. There's 3 reports that they do. They're all super informative, and they're annual, so you don't have to worry about updating them every month. But what this says is that consumers are in very good shape. Looking just at this measure, the idea that inflation is crippling households is fairly silly in historical context when you look at measures like this. And this measure was higher on average under Biden. Even though it fell a couple of years, it was still on this very high plateau, higher under Biden than it was under Trump in the 4 years that Trump was in there. There is this whole discussion around affordability, and it's like the biggest thing right now in economics. It's all the economists are talking about it, and the politicians are talking about it. I mean, people really don't like paying higher prices. They don't think about wages. They just want to be angry about the prices. Whether their wages have grown more or not doesn't seem to enter into the calculus, and the media doesn't try hard to convince them otherwise. So, but I will say this, is that prices overall have only fallen in 3 years since 1948. And the largest one was down here in 1949, a whopping 1% drop. So when Trump was lying to everybody saying, I'm going to get prices down, and some people believe that, it's just not the case. Prices overall don't fall. Prices for certain things will fall. Gas goes up and down, electricity goes up and down, rents go up and down to some extent, less so lately. They've been just going up. But well, I shouldn't say that. Rents were going up a lot until 2022, and they've been sort of steadily coming down a little bit, depending on which group you look at that measures them. But anyway, just don't count on a price decline overall. It just doesn't happen. It's not a thing. Recently, the inflation rate, this is by month. So how much more expensive was stuff in September than August? The answer to that is 0.3% more expensive. And these are the monthly changes. So we had a negative month in March. That was good news. Usually it's a battle between what rent is doing and what gas is doing. So when you see gas coming down a lot, that's your best chance to have a good inflation month. But generally, you can see they're almost always up, Here's the
just a comment. Gas actually came down starting the week of Thanksgiving, and it's come down for 3 straight weeks.
Yep.
So we're finally seeing gas prices nationally under $3 a gallon on average for the first time in a long time. Now, if you live in Chicago, you're not seeing gas prices under $3 a gallon. But
right. Yep. Yeah, they know we have higher incomes in general up here. If you're in a rural place where there's not a lot of income, the gas prices are lower. Yep. So when you look at the versus a year earlier now, how much were prices more than a year ago? How much are they compared to a year ago? That's what these dots are. And right now they both happen to be 3%. The all items one is coming up, and the core, excluding food and energy, came down a little bit. Again, this is September. The data's lagging. We get the October one, and I think it's a couple days, right, Carl? It's soon.
Thursday.
Yeah. So I mean, we just don't have that for you because it's not available. But
I think we may actually get November and not get an October.
Oh, okay.
But we'll see.
And okay, here is the Fed's preferred measure, and so these are down in that. Both of them actually at the same as well. This is very rare when they're, they're paired up and they're the exact same point. 2.8 rate, and again, the Fed target is 2.0. They want to see a 2.0 inflation ideally. Now here's where this shows wages relative to inflation. So cumulatively, since before the pandemic, wages have outgrown inflation, so the real wage or the purchasing power has been going up the whole time. Now, when the red and the blue were converging, that meant the real wage was coming down a little bit, and when the blue and the red line are diverging, that's when the real wage in this case is going up faster, but it's always been higher. You've always had more purchasing power than you had in 2019 before the pandemic. And according to Republicans, they love 2019. Trump's whole hero image as an economic Superman is built on that, and we had higher real wages throughout the Biden era. This one shows just another measure of the wages. The one I just showed you a minute ago is the green line here. That's the production and non-supervisory employees, which is about the bottom 80% of the private sector. It's not distorted by the higher paid people. But even then, the numbers are pretty close. They're not all that far different. And the wages, this year, now this one is just showing this year since Trump started, the wages have outgrown inflation. So, you can see it here, and then you can see it zoomed in here. Just the starting point is January. Wages have outgrown inflation. So despite all the complaining about prices, on average, even for the bottom 80% workers, wages have outgrown inflation. They're in a better position on average than they were earlier. This is just the wage itself in terms of dollars per hour. So it's just about $30, $31.50 or so in September. And the way this looks, and I think, do I have the long run here? Oh, I do. So I'll come back to that. But what this shows is that, back before the pandemic, we were at about $30 an hour, and this is real. So this is in today's dollars, the September dollars. This is apples to apples comparison. You had this giant peak that was a statistical anomaly. Lots of low wage workers disproportionately lost their jobs, and so the average jumped. That should not be something people consider, but the media had a field day complaining about the drop from this peak down to this here. They didn't say, by the way, you're still better off than you were in 2019. They said, whoa, look at this. The sky is falling because the real wage is coming down. Well, duh. It did, because you had to work through this problem of getting all these, 20 million people back to work. So once that got fixed, sometime in the middle of 2022, June is when we regained the pre-pandemic peak employment. Then you could get an accurate read on it, and you can look here and you can see it was higher than it was before the pandemic, and then it's been climbing steadily ever since. And so somewhere, if you ignore this pre-pandemic peak, somewhere in here, I don't know if I have it written down, but somewhere in the Biden era, I think it was in here, 2023 sometime, that became the highest real wage ever. And that's why I'll show you here. If you go back, way back into the 1960s, we had this giant peak in the 1970s. The real wage fell for decades and has been rising with some interruptions, but rising now for decades, meaning that workers were losing purchasing power here, and then through 1995 or so, and then gaining it ever since. And there's a lot of complexity behind that. I'm not prepared to answer all that here. There's a lot of things in the mix, like unions, and globalization and deregulation and, you know, the popularity of Reagan and his ideas. There's a whole bunch of different things that go into why corporations were getting a bigger share of the pie than they were before. But that trend sort of bottomed out in the middle of the Clinton administration and has been reversing. And during the Biden era, we were on this very high plateau. Even though there was this dip, you're still, you know, look at that compared to the highest it ever was. You still were only below that for a little while, but always above 2019. Always, never worse. I'll say this, I don't have the slide in here, but you guys that are on this call regularly know this, I've said it many times. The Congressional Budget Office said in 2023 that we had more purchasing power from rich to poor, all the income quintiles, so every 20th of the population had more purchasing power in 2023 than 2019. And that got about 2 days of press coverage and it was gone because they didn't want to interfere with their narrative. It was a money narrative for them. But the Fed said, not only is this real wage, you know, the Congressional Budget Office said, not only does this apply at the average, it applies across the income spectrum. Here are some other measures of household finance measures. These are from January of 2025, how much they've changed from a percent. And it's the January average to the September average. So we will update this pretty soon when we have more of this information. Some of this data you can update, like gas prices I could have updated, but some of the others I can't. And so I put them all through the end of September. But you can see that hourly wages up 2.4, gas has outgrown it, but rent, inflation, and groceries have not outgrown the wage gains. And stocks are up 10%. So if you're, you know, that's very concentrated with the rich, but about 60% of the population, 60 to 70% now, it's been going up, has some direct or indirect stock market exposure. So it's good news for the majority of the population, although it's really good news for that top 10% that has like 90% of the stock. And then here you've got the another way of looking at it. Here's some other measures. This goes back to before the pandemic, and you know, giant increases, all of these areas bigger than inflation. Wages, GDP, home prices, net worth, stocks, and net worth for the bottom 50% group all far outgrew inflation. So when you hear you know, we've got to destroy the system and start from scratch kind of narrative that far right wing has, it's like, well, not really. The system's actually working extremely well. There are people left behind, as there always are. But the poverty rate last year this is another census thing that they do annually. The poverty rate last year was like the second lowest ever. 2019 was actually the best ever. And 2024 was like a hair behind it, like 1 or 2/10% behind it. So like the 1 and 2 best readings ever for poverty. So this is, I want to make sure that you do not buy into the America's economy doesn't work for anybody. It works for the vast majority of people. There are some people left behind. So let me pause there for questions, and then we'll take let's take 5 minutes of questions, and then we'll take a break, and we'll come back for probably a half hour on artificial intelligence after the break. So let's take a look at the chat here.
David, one comment on the Census Bureau. Well, they do some work on the monthly BLS surveys. We talk about the fact that annually they publish their annual census of real median household income and all that kind of good stuff. And it's probably those people who are having to fill out those surveys are the ones that are getting the more extensive surveys that people are objecting to.
Yeah, there's a lot of people, and I can see from the comments and the thumbs up, people are really into the affordability thing. Like there's an enormous amount of media pressure on this to tell people that they are suffering because prices are up. And people don't step back and do the math to see that their wages have outgrown it. They just think that look at the prices. The prices are shocking. I can't believe it. And you'd almost act like people never got a raise the last 5 or 6 years. It's like, no, people got huge raises. I mean, again, the real wage, the real median household income, real net worth, the stock market, all of this stuff is up way more than inflation. And that's why I always push back on this sort of affordability narrative, and that there are going to be people that somehow didn't get wage increases, but they are the minority. That is not the majority of Americans that are in that pickle. Okay.
Well, one of the things that's gone up a whole lot is like price of beef, ground beef, price of steak. So if you're trying to cut your wages against the price of ground beef, I'm not getting my $2 a pound ground beef at Jewel anymore.
Right. Yep. And rising wages. Go ahead.
I was going to say, the one thing I am getting this week is my 99-cent a pound spiral sliced hams.
I'm hungry, so that sounds good, Carl. I usually have a traditional Lou Malnati's pizza for these meetings, but I didn't do that this time, so I got to look at it. And it says rising wages means little to those on Social Security. You get a COLA, and the COLA it's not that far behind. And Bill did some numbers crunching on this some time ago, but the COLA is adjusted for inflation, and also people that are retired, on Social Security, they don't have to commute to work, and so they don't have the gas costs. They don't need as many cars in their family. I mean, there's a lot of things that are not as expensive for retirees as ordinary people. The word I would say ordinary, the people that are still working. So keep that in mind too. And usually about 80% of seniors own the home they live in. That number is much, much lower for people that are in their 30s, 40s, 50s. And a lot of those seniors have paid off their homes. So a lot of the rent costs and things like that other groups are getting hit with don't really apply. And about half of the inflation that we see, and it depends on the month and everything, how you measure it exactly, but about, let's call it a third to half of the inflation is rent. And so if you own your home, then you're not getting hit the way that a renter would be from these giant monthly increases, although you still are paying more, and maybe for your property taxes or other things because your home price has jumped as well. So there's a lot of complexity when you start to get away from these numbers and get into, well, what if I count interest on my credit card in inflation, or I count things that involve financing. If you do that, then you also need to start including what's going on with your net worth, with your stock appreciation, your house appreciation. And so there's a lot that goes into all of that. But what I'm sharing with you is that this affordability narrative, you should take it with a grain of salt, and that things don't get much better than they are. They historically haven't. And if you want the government to help you with affordability, the more realistic scenario, it's not that prices are going to come down. It's that the government does something on your behalf, meaning it forgives student loans. It lowers the Medicare age. It pays for tuition. It creates benefits for childcare or other things. And that's something Republicans will never do. And Democrats need to make that case, that if you want affordability, you need to vote for progressives that are going to put in affordability, are going to make your life easier. And they are going to fund that by raising taxes on rich people. And I don't have it in here, but believe me, I was looking at this number earlier today. It's the household net worth in the US is about 167 trillion, and the national debt is 36 trillion. And the top 1% has like 50 trillion. So if the top 1% paid off the national debt, they'd still have like 5 times or 4 times the net worth of the bottom 50%. So I know that's a lot of stats. I almost always share the slide. I don't have it in here this time, but many of you have seen it. It's got the big stack next to the little stack for the debt. And there is plenty of money out there to pay for all this stuff if the political will is there, and if voters understand that that's what it takes. Because if you vote Republican to lower prices, you're not going to get there. You might get big tax cuts. Okay, then you could, in which case you are going to be dealing with much, much larger deficits. And is that okay? Maybe, maybe not. But I don't lose much sleep over the deficit. Let's see. Go ahead.
There's a question that says, can you address CPI for the elderly? I don't know if you have any of that info.
I don't have it handy. I mean, maybe Carl knows this. I mean, there is a different for the Social Security COLA. It's not the standard CPI all that's used. It's a slightly different one. But it's not hugely different, but it is designed for the cost that the elderly pay. So that COLA should be adjusted for that and not just for the CPI. So one of the things that you'll see when you look, there's a question about wage increases, and 1 to 3% seems standard. Where the wage increases happen are when you change jobs and when you get promoted. That's where you get the big money. And during the pandemic, what was happening also is there was a huge shift from like fast food and other lower paying things into like warehouses and other stuff that paid a lot more. So there was this big shift in the kinds of jobs that people were doing and that were better paid jobs. And what that caused is that because there was this demand for workers, everything went up. There was all the different areas. You saw big wage increases across all of it. So somebody said, I know no one who received a huge wage increase. That is highly unlikely. You probably know a large number of people that have if someone said to you, I got promoted, they got a huge wage increase. Or if they changed jobs and got a pay bump, they got a big wage increase. But it is true that if you stay in the same company and the same job, you're probably not going to get a large bump. One thing that corporations have gotten pretty good at, because they don't like getting sued, is they do market adjustments where you'll see maybe a 1 or 3% merit increase that's sort of to keep you up with inflation, but then they do wage adjustments to adjust for the market. I see that a lot in professional services where they're like, yeah, we gave you the 3%, but congratulations, here's another 7% because we just benchmarked against what all the other companies like us are doing and their wages were higher. So there was a lot of that going on over the past few years, and we'll see if that continues. I've been hearing anecdotes that the wage growth is slowing down a little bit. We'll see. I want to see that next release of the inflation information. We did get a wage release today, but I didn't include it or really look at it carefully because I'm waiting for the inflation so I can compute the real wage. Again, I don't look too carefully at the numbers until they're combined. The wage and the inflation goes together, so we can see what the purchasing power is.
David, did you want to take a couple hands that are raised?
Yeah, go ahead.
Okay, go ahead, Chris. You can unmute.
Yeah, hey, this is Chris from San Antonio. So yeah, I've been thinking a lot about this whole discussion about affordability. So I am going to push back just a little bit, David. I want to say that the affordability conversation impacts, I would say, working families, middle-class families in a different way than it impacts people of higher income. And I think we have to remember that, because I think even I was a little bit blind to that conversation during the Biden administration, where we had been told, and I was looking at the metrics too. I mean, we recovered. It was an amazing recovery out of, COVID. But that amazing recovery, a lot of the metrics that we were looking at from stock market and things like that didn't really impact people who were, one, didn't have, big money in investment, aren't homeowners, et cetera, et cetera. So I think we have to be careful about not making that mistake this round. So even though there are some metrics that, like for me, I'm doing really well, right? Because I have a lot of money in the market. So, and I'll do even better, every corporate tax break that Trump gives, means I'm going to do better, right? Actually, right? Because companies are milking the system. So anyway, I started thinking about this in terms of our conversations, because we can't make the same mistake that Trump made and promise lower prices, because prices once up don't ever really go down, right? I mean, that's just the nature of if food prices go up, they kind of stay up unless it's something really unusual like the bird flu stuff, right? But generally speaking, we're not going to see prices go down. So to your earlier conversation or point, is that the way we make life more affordable for people is we do like what they're doing in New York. We offer free childcare, what they're doing in New Mexico, or like what Texas is doing. They offer free college for the first 2 years, which is amazing in this red state, but they are. So that's how we make life more affordable. And then we solve the healthcare crisis, right? So it's gotten a lot of attention. We move towards universal health care. How do we pay for that? Well, we pay for that by a more fair tax structure, meaning, back in the 60s, the top 1% were, the highest tax rate was 90%, right? It went to, I think, 80% initially. It started off at 80% under Reagan, and then I think dropped to, what was it, like the high 30s maybe under Reagan. So that's how we pay that's how we pay to make life more affordable, okay, in my opinion. But
No,
anyway.
this is everything you said is right. I think we definitely should not be, talking about, deal with it people. Like I say deal with it people because I want people to know the facts. But the solutions are exactly what you said, what I said earlier too, is the government is going to have to pay for stuff for people. And they pay for that by taxing the rich people more. And if the Democrats steer the conversation that way, that is a much better way than I'm going to lower your prices, because that is a lie. It doesn't happen. And that is a great point. So don't tell them, hey, everything's better. Look at all these statistics, which I just shared with you. You tell them the solution is just what you said and what I said earlier as well. We're going to pay for stuff for you. Now, we don't use that language, but these are the programs that we want to put in, and here's how we're going to pay for them. And these things are going to help you because these are the pain points that you have in paying for stuff. Now, so I agree with you on your approach. I want you guys to all understand that the idea that people are worse off is wrong. That the Congressional Budget Office, the best analysis we have, they are the best and the most impartial, said in 2023, all the groups, the poorest 20%, all the way to the richest 20%, had more purchasing power in 2023 than 2019. And 2019 to Republicans is, the holy land of the economy, and to a lot of journalists. And that's why that article, that it's not an article, it's their report was just got nowhere, because they didn't want to, none of the media guys wanted to cover it because it made them look like they've been lying for the past couple of years, which they had been, complaining about this decline in real wages, which they never should have been complaining about, because they were always wrong analytically to treat this as a legitimate starting point. And they knew that. The BLS reported that this peak was garbage. And that's why, as somebody that explains economics to people, I say, listen, I can give you statistics all day that tell you that you're in better shape than you ever were under Biden. And Trump is doing his best, but it takes a long time to turn to really damage the economic machine severely. But, we're starting to see it. Prices are a little higher. The unemployment rate's higher. Things are starting to slip. And we'll see, if that continues. Trump is getting as we'll talk about with AI, he's getting a really big rescue from enormous investment in in that sort of building of the AI infrastructure. And that is an unusual piece. So I'm with you on the solutions. I just want you to all understand that the evidence is that people at all levels are better off than they were under Trump in 2019. And the media painting Biden as this economically hapless guy it was a terrible failure of communication all around.
Okay, David, James has his hand up. Would you like to take his question? Okay, James, you can unmute.
Well, I agree with the last statement. There was a lack of communication. They should have been out there telling everybody that your real wages was still higher than 2019 and in 2023.
Yep.
But they didn't get out there and toot their own horn, which was a big mistake.
Yep.
One of the things that I don't think a lot of people understand is there's a lot of things that are locked into the system that are not going to get corrected easily, such as we have all these mortgages out here that people have paid high prices for property, the apartment buildings and stuff. So rent can't go down because they have to cover the mortgages. So some of that stuff is for as far as rent can't go down. It has to be worked through. It has to stay high. And so the affordability right there is one of the things you got to look at.
Yep.
And as far as, the younger kids, they don't have the opportunity to buy something. And we need to have, like Kama was talking about, we need to have single family homes produced, or change the law whereby, like after the 2008 crash, allow the Fed, Freddie Mac and Fannie Mae, to lend to condos, because they don't lend to condos anymore, except if you put 20% down.
Yeah.
So that would make a big difference if you could start making, allowing people to buy condos and putting 5% down, 10% down. They could start having houses for themselves rather than having to rent.
Yep.
So that would be a big thing.
Yeah. Oh, yeah. I mean, housing is a great way to build equity. And if you don't have the money for a down payment, though, it's really difficult. You may be better off renting if you can't put 20% or more down.
Yeah, and that's hard to get
How do we do
right
that?
now,
You know? Yeah.
unless you have a family that can do it for you.
Right. Exactly.
And that's the problem. And you can't save it given that you have to pay so much for rent.
That is true. Thank you, James.
Yeah.
Okay, we have Jeff with his hand up. Would you like to take his question?
Yeah, I just want to say this is a really incredibly valuable presentation, David and Carl. I really appreciate as the economist here running for Congress, I really appreciate the solid economic analysis. Everyone on this call should be very thankful of that realism that you're bringing. It's super valuable. I think I would just make one comment about affordability, which is maybe a little what Chris was talking about. When I hear it, when I talk to people around the 9th district, a lot of it is reflection of not day to day being able to pay their groceries or even the rent. It's this worry about the inability to generate wealth enough to own their own home, or to have enough in their savings for the inevitable, longer life that we're all leading, or the ability to pay for college for their kids. It's just kind of like float, just barely keeping their head above water kind of sense of affordability. Because I think you're right about the raw statistics are not lying. That's just what I hear talking to voters. But I just wanted to share that and say thanks again for this, because it's just so valuable.
Thank you. There's a great point that you and Chris have made, is that how Democrats approach this we have to be very sensitive to it. And we have to not assume, like I have a narrow focus on this, that you're better off under almost every economic statistic we can find, but that's not what they're judging this on, right? And that's a good point that you guys are both making, is that if you're going to get ahead, paying for all these things, the government is going to have to help. There's almost no way the private sector is going to change so much that you can suddenly pay for your kids' college, and that you can suddenly, retire at 65 and live for 35 years. I mean, and so when Democrats tried to get student loans eliminated for 40 million households, I can't believe that. I would estimate that probably 2/3 of them, or only 2/3 of them, or maybe half of them, voted Democrat. Can you believe that? I mean, the number of people with student loans that still voted Republican or didn't vote is enormous. And so how do we get a leader that is inspiring enough and is talking about this, like a Mamdani nationally, maybe, whoever that is? How do we get him to do that? And this is the big debate in the Democratic Party, because you got a bunch of centrists as well that are really happy with the status quo and are not willing to step forward and say, the private sector is simply not going to get you there. It never will. The way you are going to get ahead on healthcare, college education, and retirement is if the government does more for you. And a lot of people may struggle, how you message that and the kind of charismatic person that can sell that, we got to find them. And it's just hoping that the private sector is going to deliver that kind of value it's just never going to happen.
Yeah, we're too out of balance right now. That's the problem.
Yeah.
We're too out of balance for that to work.
Yeah, that's right. Okay, so let's take a break. We normally take a break at about 8, but I started babbling and then you guys brought up some really good counterpoints. So thank you for that. Let's start up again at 8:35. And the last part is going to be heavy duty on the AI piece, and we'll talk through it. You'll see it. Hopefully you'll come back for a few minutes and see it. We'll probably end about 9:10 or so. Thank you.
Okay.
I see Dr. Chris has her hand up. Did you forget to lower your hand, or do you have another comment, Dr. Chris?
You can unmute, Chris.
Oh, I'll wait till we come back from the break. I just was going to make another comment for David.
Your comments are excellent, so let's save it.
Okay.
I'll leave your hand up.
Okay.
I have to say, I do like the word affordability.
That
And
word? That
yeah.
word, huh? No.
Well, I do, because I've just kind of been thinking myself. I'm on Social Security.
Mm-hmm.
That's the fixed portion of my income, and that's going to go up by 2.7% or 2.8 this year, automatically in January. And then I have some investments that I made, but I have locked in my retirement a 5% gain, plus I get an automatic distribution on that, but that stays pretty level. My house has increased in value, but until I sell it, I'm not going to realize that. And so that 2.7 on a portion of my income, which is about 70%, doesn't seem to cover the $8,000 increase in real estate taxes that I have this year. And I'm not talking about the price of coffee, although we did find a sale on Jewel where we got the our Folgers at 11 something, 12, almost $12 for that 2-pound can, which was amazing because it was regular 21. At 21, my God, it was $5 just a few years ago. But so I think affordability kind of means what you're feeling when you're looking at the numbers.
But Jim, Bill, can I say something on that? Because you hit
Sure.
I agree with you, but we also have to acknowledge affordability for whom? What's affordable for you, me, and when I lived in Lake County and Prairie Crossing and all that great, like, is so different from what was affordable for people who lived in parts of Waukegan and North Chicago. And I think that when we use those kind of terms, we have to be sensitive to this economy is not all one thing to all people. And I had a question that I didn't raise earlier. Well, I raised it almost when the conversation was over with regards to employment and the employment rate. And my question was, and it still remains, those people who worked in the small businesses that were impacted by ICE, and I know of some in Arlington, some in Evanston, some, they never came back to work. And many of the businesses had to close because they didn't have any staff. The snow in Chicago on the north side, the people that rake that snow primarily work for businesses, but they were of Latino heritage, and many of them were abducted by ICE. And so now my church members are out shoveling their snow in front of their church because the company that they had hired to do it can no longer do it. So I think that I agree. I think that all of this is very important, but it comes from a lens primarily of the middle class. And I think that at some point, if we're going to look at why people didn't vote for the Dems, and particularly it's already been analyzed that lower income people, primarily, I won't say primarily people of color because there were some whites in the South, but lower educated people did not vote for the Democratic Party in the number that they should have given what was going on. And partly because I think when we talk about messaging, we have to message to not just us that we're talking to online and got a computer and a laptop and all that stuff, but we have to talk to those people out in the community who don't have access to this information. Even if they had it, it wouldn't be relevant to what they're experiencing. So if we're talking about broadening the vote, we have to broaden the dialogue and make sure that we are inclusive when we talk about affordable. Because again, I say affordable for whom?
So, Ori, I agree with you 100%, because where I was going to was I live comfortably, but I'm concerned about affordability. And then I think of many of my relatives up in Waukegan or in southern Wisconsin, the people that I have become friends with on these calls, etc., who literally uh, are, are are at their wits' end as to whether they're going to buy food or rent or whatever. And so I was I was looking at David's numbers and everything, and I was kind of agreeing with him and everything. And then I started looking at some of my spreadsheets and different things, and I'm saying, well, it just doesn't feel right, you know? So if I'm having a problem with affordability, I can only imagine what maybe 60, 70% of the country must feel worse. And then the fat cats up there, they don't even know what we're talking about.
They
Donald
don't
Trump
feel
has no
nothing, Bill.
clue.
Right. They
Yeah.
don't even, and
Yeah.
again,
So,
they don't care about affordability. That word doesn't exist to them.
yeah. So you and I
Yeah.
are on the same track. There's a great word. What was it? You can emphasize or you can sympathize. I think in this particular case, I can empathize, but I literally can't sympathize for somebody that's trying to figure out whether it's drugs, food, rent, or what they're going to pay. I'm upset at where these things are, but I always have someplace I can go, with stocks and other things like that I can pull some money out. But I don't know where people go when they're jammed. Um, and I think this is a huge issue, positive issue for the Democrats, when it was a very negative issue for the Dems in the last race. So great, great. I did see somebody else had their hand up, but then it disappeared.
I'd like to say, the big thing is that a lot of the people don't understand the economics. They don't understand all these economic things that we're talking about here. They've never been taught in school about economics. They don't understand the statistics. I mean, I understand them because I had 3 semesters of economics in college, you know, and I understand it. And I've been in business for 30, 40 years, you know, and it's tough. It's tough for me.
Yeah. You know, James, you've heard me talk about the current events group that Jim and I and now Constance go to, and they're mainly MAGA Republicans, etc. But what they've been complaining about a lot is the cost of their insurance bills going up. And one of the women who I know is probably my age, on a fixed income, she started out the meeting the other day saying, my health insurance is going up from $450 to $890. How do I afford that? And I thought, oh, this is going to be a wonderful meeting, you know. But in reality, this is what people are facing all over the place. And as January hits and people are getting these bills, there's going to be a lot of, what do they call these moments? Come to Jesus. So yeah, David, I'm sorry, I wanted to start my own discussion. Now it's back to you.
No, it's okay. The affordability thing is really the biggest thing going on in economics right now, isn't it? I mean, this is it, and politics. The party that probably explains this the best is going to win. I think immigration had a huge amount to do with this in the last election as well, but that there aren't a lot of immigrants coming in, and so that's probably not going to be front and center in the next election. You're not going to have the Democrats arguing for tons more immigrants coming, and the Republicans feel like the problem has been solved, the border's been locked down. So I think it's going to go back to, it's going to be a genuine election on affordability. It won't be a fake one where I think it was 70% immigration and 30% affordability in the last one. This is going to be a straight up economics fight. We should be able to win it. And, you know, we're going to say, this is what we want to do for you to make your life more affordable. And the Republicans are going to say, we're going to give you tax cuts to make your life more affordable. And we got to win that. And we'll have to figure out who the messenger is going to be and how they do it. I don't think it can be somebody that's been out there for a long time. I think Mamdani's got the right message. There's another, what's the name of the gentleman? Is he out of Texas?
Tallarico.
Yeah. That's a you know, a fresh face that can sort of rebrand the party on an affordability message and make it credible, has the best chance to win. You know, if you're talking about budget deficits, you're not going to win. You shouldn't have to talk too much about immigration because people feel like, you know, there aren't that many coming. So what's the problem? You know, we've made the case here before that Biden did the right thing by letting in a ton of immigrants at exactly the right time. When we had 2 open jobs for every unemployed person and the economy just boomed. It was real supply side economics, but that's not going to be the debate for the next one. And so what's our offering? The Democrats have to say, these are the 5 things we want to give you. And the Republicans are going to say, these are the 5 things we want to give you. And there it's going to be. That's where the chips are going to fall. All right.
David,
so,
you have two hands up.
I have one thing I'd like to say. There was a comment about health insurance and how health insurance is going up. And what we're losing, of course, is the subsidies to ACA. And the people have been paying the subsidized rate, and now they aren't. And so these subsidies were always listed on your ACA sign up. They were documented, and all of a sudden, you know, they're going to be zero. So people are accustomed to the subsidy, and but you know, they have to recognize they were getting a subsidy which they voted to give up, and now they don't like it. And I know in a campaign you can't rub somebody's face in that, but it is the way it goes. And you know, have the day you voted for.
Yeah. Chris was going to ask a question, right, Dr. Chris, before the break here.
Yeah,
Oh,
it was really just a comment as we were talking about the prices. So I think there is actually one area where the government can do something to positively impact prices, and that is the work that Lena Khan was doing related to antitrust, and monopolies, and we do have a lot of data that supports that we just have a couple of really large companies controlling the majority of, the food market, et cetera. So I do think there's a little bit of work that can be done there. I'm hopeful that once we regain power, those are the kinds of things that we can do. But as I've already mentioned, the going after the subsidizing college, I lived in Europe for 29 years before I moved to Texas. Like the Europeans know how to do it, right? Whether it's healthcare. So, I mean, if we go after the healthcare costs, if we go after the, education, college. I mean, just think about, I was on a website with, it's called Liberal Moms of San Antonio. And, I mean, some people have like $500,000 in student debt. I mean, can you even imagine starting off your life as a young person owing $500,000? Like, I mean, so that's the kind of stuff I think we've got to go after. And I do think it's important, though, that we adjust our messaging. These aren't government handouts any more than it's just funny. It's ironic to me when we're talking about social safety net programs, what we call that welfare and handouts and whatever. But when we subsidize the fossil fuel companies and we bail out the farmers because of the negative impacts, we never talk about it in the same way, right? So anyway, so let's go after some of the, let's start, instead of subsidizing our big high profit, fossil fuel companies, let's start subsidizing healthcare, 100%, right? So anyway, those are my thoughts for the night.
great points. Thank you.
Chris.
Those are great.
And David, Renee has her hand up. So would you
Yep.
like to take her before
We'll take that and then we'll resume. Yep, go ahead.
Okay, thank you. Go ahead, Renee.
Okay, I want to try to make this brief. So, one, this sounds like, listening to this call sounds like a lot of theory that's completely divorced from reality or devoid of reality. There are a couple of things that I can think of that I've read about, that I've learned about in the last couple of decades, beginning with the fact that wages in the US have been stagnant since like the 70s. And I don't believe that was ever made up or normalized. I know from working in corporate America for quite some time, I know when wage increases change from perhaps the lowest increase would have been 7 or 8%, and higher increases were above that, to that changed, and I'm not sure when, to 1 to 3%, maybe 4 or 5% in some companies. But that is a real thing. Even, and there, of course, have been exceptions. I also know that companies, because this has happened with different companies that I've worked with, where I've seen how every department gets a budget, and one's increase is based on the distribution, on how the manager or whoever is making the decision distributes that money that they have, that little purse, amongst their employees, amongst their workers. And some people, very few, and it's usually mandated that there are very few, will be on the top, and most people will be perhaps under the middle and on the bottom, depending on the reasons for giving them a low rating, which justifies the low salary increase. The other thing is that when I know I have heard and read for decades now that there was a challenge that social service agencies, churches, people who were feeding the quote unquote needy that they were having because they needed to change the face of poverty. Because in the United States, poverty and people who are poor and impoverished are believed to be non-white. And truth be told, as a country, we don't really care about those people because we continue to have the same thing going on in communities because somehow we believe that that's something that's inherent to those communities and it's not systemic. But the challenge with these institutions and these organizations that were trying to feed people was that they were having difficulty getting support and getting money because they were in areas that were considered to be middle class or well-to-do or wealthy. But there was still a need for food pantries because people didn't have food. They didn't have resources. That has been going on for a while. The other thing is, yes, I get it. I'm not an economist. I'm not doubting anything that any of you know and that you've studied and that you say. However, knowing that everything that goes into the buckets of an individual families or an individual's personal economics, it includes the things that people are talking about. It includes healthcare. It includes cars and car maintenance so they can get to their jobs. It includes health insurance, which wasn't necessarily cheap, even without the subsidy. And the question to ask for the society to me is, why do we even need a subsidy? Obviously, we have the subsidy because it's needed, because people may not necessarily have the money. And in terms of people getting what they voted for, there's no real big they out there. We're all in this together. And we all are getting what other people voted for, what we may not have voted for. So to me, it doesn't help me at all to hear that. And I know it doesn't matter, but really for me, it's just, okay, fine. So how does that help us all change anything? And the last thing is that Mom Donnie's win and the win in Miami, and the wins in Texas, these wins across the country, they were not DNC wins because the DNC did not support Mom Donnie to begin with. And there are other people who won who were not necessarily supported by the DNC. And I believe until people can see that it is not that we are so diverse as a country, that we are so diverse in terms of economics, in terms of education, and we all are still worthy. We all still want the same things. We all need to be able to recognize that we're all basically just human doing the best that we can. And how can we help each other?
Now, these are great points. And, there is only so much the economics can do. At some point, there are people left behind that are going to need a lot of help, that the free market is not going to work for them. And the government is going to have to step up and do a lot more. And the rich are going to have to pay a lot more in taxes, which they don't want to do. And all the points you make are valid. I will just mention a couple of the economic ones. When you said the wages have stagnated since the 70s, you're not wrong. This diagram says real wages were at this peak in the 70s, and they fell for 25 years, and then they've been coming up for the last few years. And it only was recently in the Biden era that we truly got back and have been above that 1970s number. Now, this is the wage, this is adjusted for inflation. So when you say that, you are correct. The other thing here is, which is the one I wanted to show you, is this one. Because you've got two incomes now in many homes, or one high income, depending. This is why the real median household income is now at a record level. It is. And so when people say wages have stagnated, that is correct. When you say household income has stagnated, that is not quite true. It did for a while, for here to here, 15 years, you didn't have much of a forward progress. And now we're up here. So things have been going in the right direction, but it is because you've got two working people in the household often, and at these now pretty good wages. Historically and on a very high plateau the last, 5, 6 years. And let's hope it continues, because this is not guaranteed, right? This could start going the other way, just like it did for 25 years before we figured it out and started going back up. All right, let me start with the AI stuff then, and we will get that done. So there are a handful of companies, the Magnificent Seven, the Mag Seven, they're called. They're listed here. You all hear about them. Most of you probably have an Apple phone somewhere near you. Meta is Facebook and I think Instagram. You guys all know Microsoft. NVIDIA is the chip company behind all this. And then you guys know what Google is and Amazon. Tesla is kind of the weird one in that it's a big tech company, but it's doing a lot with AI, but it is not really, the company that's in the middle of this. The Broadcom would probably be a better example of a company that's consistent with the other ones in this group. And the bottom 500-ish stocks, the S&P 493 has had nowhere near the return of the Mag 7. This is where a lot of the money is. It's good and bad news in that if that group were to correct, meaning people were to start taking their money out of the Mag 7, a lot of that S&P, that money is a lot of that's going to go into those other 493 companies. It doesn't mean that you've got an overall market crash. You might have a crash in the Mag 7. If you have a lot of your assets in the Mag 7, then you are at some risk of that, and you may decide to diversify them. But at some point, the money is going to come out of there, and it will go into other things, bonds, and the other stocks that are in there. So we're not here to forecast when that's going to be or when that might happen, but be aware that if you're a Mag 7 holder, there is a lot of money that is in that, and those companies are very richly valued in terms of very, very high stock prices. Now, the way this kind of works, the way they compete is what this diagram talks about. So NVIDIA is like the chips and hardware provider behind all this. They're the ones that are, if you are plugging the device into the wall at the data center, it's got NVIDIA chips in it. OpenAI is the one that is doing a lot of when you hear about ChatGPT or Copilot or other things, those are built on some kind of foundational AI model, a brain that it's a synthetic brain that they're working on. And companies like NVIDIA and Microsoft are investing money. They are owners of a company like OpenAI. They also sell them, in NVIDIA's case, they're selling chips to OpenAI. Microsoft is paying OpenAI for the right to use their intellectual property, to use these brains for their own purposes. They're paying for it. And so Microsoft has this cloud service, they call it the cloud ecosystem. These are giant data centers. And in there, on the machines, in these data centers, on all these little servers that are listed here, these big computers, they've got the NVIDIA chips, and they've got the OpenAI brain, and it's called the Copilot product from Microsoft. It is built on a ChatGPT brain, essentially. And there's some complexity I don't understand in terms of exactly how the legal arrangement is made. It isn't that Microsoft bought all that intellectual property and they have the code, so to speak. They are sort of renting that capability. And so I don't know to what extent they have all of the intellectual property rights, but it's limited, is my understanding. OpenAI is not crazy in giving away all of its intellectual property. They are sort of renting it out. So then we as consumers will ask our Copilot AI, we say, you have a question, what are the top 5 things Democrats should do about affordability? And it will give you the top 5. You can, like it or not like it, or see where its sources come from. But it is something you can talk to, as opposed to searching in the past. Now you can ask it a question and it will answer in natural language to you. And you can keep asking it questions and ask it to put stuff in tables and do all these cool things. Almost all of you, if you have a Microsoft system on your laptop, have access to this, and you can use it and start tinkering with it. You'll be surprised at how useful it can be. The ChatGPT OpenAI product is also sitting in there separate. You can also go right to ChatGPT and use that as well. I'm more familiar with the Copilot product that Microsoft is using on its stuff. And of course, companies like the Southern Company or other utilities are providing power to the data centers, and they're paying to the consumers. And because this is a finite resource, the prices are going up. In some cases, because the data centers are starting to really take on and use more and more power to do the different kinds of things that these companies are doing, to try to build a true AI brain that is human capable, where you can have a conversation with it and not have a clue that it's an AI, that it's it would pass the Turing test. If you have seen the movie about Alan Turing, what's it called? The Imitation Game. That's Alan Turing, and Turing test is, he's one of the inventors of the computer. This is kind of an example for Microsoft, NVIDIA, kind of how they compete, how Microsoft works with NVIDIA. You can read this sort of horizontally. That's sort of that last page that I just shared about NVIDIA is the hardware provider, OpenAI is the model originator, Microsoft's that company in the middle. The product they're selling is Copilot, and then it's housed in the Azure cloud ecosystem. Here it is, the Azure, Microsoft Azure. Think of this as their business that runs all the data centers. And so other companies are competing similarly. So you read this horizontally, not vertically. So like Broadcom and Broadcom is working with Google. So NVIDIA and Microsoft, Broadcom and Google. Google's product is the Gemini, and they're in the Google Cloud. So I won't go through all of these, but this is what you have are these sort of 5 major sort of competitive groups that are going at each other. The two main brain originators, OpenAI and Anthropic is the other one. And then arguably Meta, I need to learn more about this, but you sort of have these different guys that are competing to create this brain. And the sort of the platform that this brain operates on. Like everybody uses the Windows operating system. There's an analogy in the AI space to get everybody to use sort of the AI platform, and that's where Meta is trying to run that. And they're doing it in what's called open source, meaning they're sharing their code more openly with people, whereas Google and Microsoft up here are competing. Everything's proprietary for the most part. So that's what all this is, kind of these chains of competing firms. But NVIDIA versus and Microsoft versus Broadcom and Google is kind of one of the big sort of chains that are battling right now. And Amazon's always up to something, so we'll see how they get in there. To give you an idea of the amount of money that we're talking about here, this is a quarter of revenue. $57 billion in one quarter for NVIDIA. And that is growing at a 62% rate from last year. It grew 22% versus the prior quarter. So there is very rapid growth happening here, which is why these companies are so highly valued. And people are betting that they're going to be able to turn this into enormous profit. NVIDIA is doing that already because everybody wants their chips. They have sort of the best AI chip. Google and AVGO are working on sort of a different kind of chip, but it's still very capable in this area. And so you've got these crazy good numbers, like $31 billion in profit out of 57%, on a 57 billion revenue, so a 73% gross margin, or actually net margin, that would be net margin, but the operating expenses are tiny compared to the revenue. It just they're able to command an incredible price premium on these chips because they're in such demand. Now, the question you'll hear in the news is about this idea called circular financing. NVIDIA is investing in OpenAI, and it's also leasing its chips to OpenAI. So the money that NVIDIA is lending to OpenAI as part of its investing is coming back in lease payments. So the question that some people have brought up is, are they double counting? Are they double counting their revenue? So far, the verdict is no. But if these companies, if NVIDIA owned OpenAI fully, they wouldn't be able to recognize quite the revenue that they're recognizing here. So I'm curious to see how this all plays out. But if you hear people saying, the NVIDIA numbers are all fake, blah, 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 that's very debatable. But there is something going on here where NVIDIA's cash is coming back to it. It's investing in a company that doesn't really have it doesn't, its expenses are way higher than its revenue. And it's getting that cash back in lease payments for these chips, which instead of selling the chip, it's sort of leasing them. These chips are so valuable that they're sort of putting them in the data centers and leasing the right to use them. Other companies like Oracle, Amazon, and others are also creating data centers, or they are, and I'll go into this in a minute, but they are behind the money behind a lot of the data center building. They are borrowing a ton of money to build these data centers, and they are also getting lease payments in here from OpenAI for using the data center. So OpenAI is paying for the chips, it's leasing the chips, it's leasing space in the data center, and it's paying an enormous amount in rent, but a lot of that money is being given to it by those very same investors. So there's a circular money flowing around, and it's interesting trying to get your brain around it. I'm a CPA and I'm still struggling with it, but so far nobody's accused them of fraud. So I'm wondering, but it's an interesting debate they're having, and the CEO of NVIDIA has been challenged on it. Michael, I'm going to forget his last name. He was in the movie The Big Short, is one of the guys that's been talking this up, that this looks like double counting and funny numbers to him, which probably means he's shorting these companies. He's hoping they'll break. he'll make a lot of money when they sell. More complicated diagram here, but the idea is that, and I'll answer your question in a second, James. The idea is that a company like, and there's an example, it's in text down here at the bottom, and I tried to create a diagram, but this will give you a sense of how complicated some of these things are. Meta wants to build a data center. It wants this 27 billion data center. It's going to have all these servers and chips and all this stuff in it. It doesn't want that debt on its balance sheet. So what it does is it goes to a company called Blue Owl Capital, a private equity firm. They create a special purpose vehicle legal entity, call it a shell corporation, and they then issue bonds to the public to get money, and then use that Blue Owl Capital, and then whatever the name they give to this SPV is, they're going to pay all these general contractors to, and then the construction firms underneath them, to build this 27 billion data center, and then Meta will lease those services and use it for its own purposes. But it has managed to not issue bonds itself. The bonds are technically issued by Blue Owl Capital. Now, why does this all matter? It matters because Meta looks a lot better than it would look if it had an enormous amount of debt on its balance sheet. It doesn't, it's off balance sheet. It's not on their books. And these bondholders are, they owe, or they are owed all this money. Will the data center be profitable enough to generate enough cash so that for them, over time, to pay the dividends and interest, not dividends, but the interest that they are owed? Now, in the Great Recession, you heard about all these complicated debt arrangements that people were entering into, multiple tiered, mortgage-backed securities and all MBS, all this complicated stuff, collateralized debt obligations. It's all happening again, ladies and gentlemen. They're doing it again. And so these bonds are not simple bonds. They are going through all this crazy stuff. So there's a great article, if you can get access to it, in the Atlantic, but I excerpted it here, and that explains in text what I just showed you with this diagram. Now, once this data center is up and running, Meta is going to pay Blue Owl Capital, same entity as here, I just moved it out, for the use of the data center. But you're going to have a bunch of these weird shell private equity companies doing this, and public pension firms are starting to buy these bonds. Retail people, individual people are not buying these bonds. Giant pension funds are buying them, meaning this whole complicated arrangement is becoming too big to fail. All right, and it's not regulated. The private equity firms are very lightly regulated compared to a bank. A lot of this is opaque. You don't know what's in there. And so the article does a great job of pointing out that there is this sort of this box, this magic box operating. There's an incredible amount of money in there, and it's rather opaque in terms of its financing arrangements. And I know it's a little bit much to see this. These diagrams are complicated even for people like me that are CPAs and deal with them in work, but that's basically what's going on behind that. Let me pause there, and James has his hand up. Go ahead, James. We may have to unmute you, or you may have to unmute.
He should be able to unmute.
Okay.
Go ahead.
Yeah, that was interesting. So this is, what's the name of the article in the Atlantic?
It's at the very bottom. Something ominous is happening in the AI economy in the
Oh, okay.
Atlantic.
Something happened. Something happening.
Yep.
Okay. My other question was, where is NVIDIA making these? Are they making them in China or Vietnam or United States?
That's a great question. I don't know where their factories are for the most part. So that's a great question. I don't have a good answer for you. I don't think the majority of them are here, but I don't think they're in China. I don't know how China, because there's this whole deal that's going on where NVIDIA got the right to sell a particular chip to China. It's not their highest end chip. So I don't think they're making them in China. It's got to be somewhere else, probably, I'm going to guess Taiwan, but even Taiwan wouldn't make sense with China. So I'll look into that. That's a great question. We may have someone else on the call that knows. Any tech aficionados on here? Nobody? We'll have to look on the AI, have the AI tell us where they're making their chips, but I just don't know that one. All right. So here is just a kind of what I was talking about in this debt bubble, this too big to fail piece. You can't assume that private equity is remote from the other parts of the economy. There are too many people own these bonds where if the whole AI thing, somehow they're never able to make the brain that they think they're going to be able to make, and the whole thing comes down. Pension funds and others are buying a lot of these bonds, and the government isn't necessarily going to want to let them fail. So we're setting up another one of these possible, not guaranteed, too big to fail scenarios where if this doesn't all work out and all this money is bad debt, basically, are the private equity firms going to be able to go under without taking down pension funds and others? So to be determined, but this is some of the, it also discusses some of the circular financing here. And by the way, everybody gets a copy of this presentation. It should be linked in the chat. You should all have it if you were part of the email chain. So the way some of this combines, you got overvalued assets. Back in 2008, it was homes. Now it's these GPUs, which are the chips and the data centers. You had subprime mortgages back then, and now you've got AI infrastructure loans. You had CDOs and SPVs back then, you got them now. Back then it was investment banks that people thought would be allowed to fail. Like we thought we could get away with letting, which one was it that we let fail? Lehman Brothers. We let Lehman Brothers go under thinking they're just an investment bank. They don't have regular depositors. Their investors are deep pocket people and can handle it. Nope. The word was the whole financial system was going to go under and they had to be rescued. And they may have to do that again here because there really isn't strong regulation on private equity. And all of us may have some exposure to it. Obviously, we own, because we own S&P 500 index funds in our 401k, a lot of that return has been driven by the Mag 7. And so hopefully when the money comes out of there, it goes into other stocks, but in some cases it may not. And so we're all part of this. This is how many data centers are in the US, and the data center definition varies. Some things can be, I'll show you the definitions on the next page, but Illinois got its share. I work for a pension fund that has its own data center. We don't just go in the cloud and use the services. We actually have our own machines in one of our buildings. And so we have a data center. There are many others that's a very simple data center. There are others where they're, giant warehouses filled with servers as far as the eye can see for a quarter mile. There aren't 4,000 of those. These are the numbers, they call those hyperscale data centers. These are the giant ones. And there's about 1,000 or so plus of those. And these are just various kinds of data centers that add up around to that, somewhere in that 4,000 number. And they can be small, they can be giant, but these are the ones you think of when you see the giant warehouse being constructed with all the cooling machines on the top. That's probably one of your data centers. That's one of the larger, one of these top two guys in terms of the size of them. McKinsey, the big consulting firm, is estimating that almost $7 trillion is going to be invested in these things by 2030. And that's global. That is very fast considering it is almost 2026. That is a heck of a lot of capital investment that is going into these things, and there's going to be debt issued with that. It's not all cash on hand. The debt is going to be, there's going to be $7 trillion in debt floating around on top of what's already out there for this. And you'll see this sort of, what bucket are they in? Some of it's labor, some of it's servers. This is the hardware. I don't think they have, I'm not sure if storage is, no, somewhere in the servers is probably where including graphics processing units. Yeah, this is, the servers include the chips. That's in this big blue bucket, $3.5 trillion worth of stuff. So when you see NVIDIA doing 50 billion a quarter, there's $3.5 trillion going into this space in the next 5 years. Is that stock overvalued? I leave that to you. This is the kind of power demand we're seeing from 2023 on in terms of, what is it, the mega, what do they call it? They have a term for it. But terawatt hours, not megawatt, but terawatt hours going up to 606. So almost 4 times the power. Now this is, to be clear about this, this is data center power demand, not the whole demand in the United States. That's the second graph, which shows the share of the power that they're going to need, basically. It's expected to grow such that it's 11% of the power, not 3.5%. And so when you hear Trump and others saying they just want to drill and they don't want to build all the other kinds of power generation, we want to build it all. We're going to need to, or those rates that we're paying for electricity. I saw a study the other day that said up 13%. The government data is more like 4%. It's either way, this number is going to get a lot bigger. So now, in terms of the impact directly on the economy, Jason Furman, who's over at Harvard and does a lot of, he's in the public eye a lot and does a lot on Twitter and other places. He's saying that GDP, excluding these AI categories, grew at a 0.1 annual rate in the first half of this year, meaning there was almost no growth outside of this, almost none. And he's got different stats down here for, how much this is, but that's the bottom line, is that it's AI driven the first half of this year. Here's another fancier way to look at it. Bank of America tries to break it down into the different categories of GDP, the components, and how much of it, but software, data centers, computers, and peripheral equipment, they added up to like 1.5% of GDP, and we only grew at 1.6. So that's kind of aligns with the Furman statistic that almost all of it was AI related. And then here is just, if you look at the pure info processing equipment and software categories, they contain AI, they contain other things, and you measure them relative, their contribution to GDP. Here was the amount, and it was mostly the first quarter of this year, not as much in the second quarter, but the first quarter was, it contributed 1.20%, and GDP growth was negative 0.6, meaning it accounted for all of it and then some, and now it's a little more, just a big chunk of it in this quarter. So we'll keep track of this. Carl and I will see kind of how this goes, but it's a huge dependency of our economic growth now is based on AI investment, and maybe arguably before it was based on an enormous number of immigrants coming in and demanding stuff and driving the labor market. Now we're switching over to this sort of debt financed investment. And here's just another view of how much the data center line item is. There's a lot more than just building a data center. You've got all the pieces that are in it. You've got all the labor and all the other stuff that goes in there. But this is how much just to put the 4 walls on these things, is my understanding, from like 10 billion back in 2023 to 25 billion in the second quarter of this year. So, and these are annualized numbers. So this is the rate during the quarter, but it's, if you kept going at that rate for the whole year, that's how much. So, 15 billion to 25 billion. So very rapid growth just in the building, the physical building. All right. So that's pretty complicated. Went through it in a hurry. Lots more to learn about this subject over time. We'll revisit it from time to time, and we'll mention when we get the GDP report, we'll talk about some of this again in terms of the contribution. But you've got all copies of the presentation. You can look at this. Hopefully, you can get a guest copy of that article on the Atlantic, which was superb. Or at least you can ask the AI about it to paraphrase it for you. Say, here's the article. It's in the presentation. What can you tell me about this article? So I did that, and it had a lot of really cool information. It didn't say it couldn't do it because it was copyrighted or behind a paywall. It was able to get at the information.
David, what is the name
Yes.
of that article again?
Oh, okay. I'll go back. It's
Something ominous is happening in the AI
something
economy?
ominous is happening in the AI economy from the Atlantic.
Okay, I did post that in the chat for anybody who's interested.
Awesome. Thank you very much. And it's a really fascinating article, but it is definitely complicated. I mean, I had to sit there and kind of go through, like I said, this is my idea of a good time. I took that paragraph and turned it into that picture. So, this is what I do when I engage with an article. I mean, I'm trying to figure it out and explain it to you guys. This is extremely complicated stuff. There's nothing simple about it. So if you're like, whoa, this is a lot, took me a while to put it together. You got a month to read it, and good luck with that article. But there's risk that's starting to really creep out there, and there's been this very frothy view of AI is going to be the ultimate panacea, but now we're starting to see kind of the dirty laundry that's going with this, and there's a lot of collateral impacts from I didn't even talk about water here, right? Somebody's going to talk about water. I don't. Was that Rita? She's ready to talk about water. So I mean, there's the water issue. I think. And I don't want to steal your thunder, Rita. Somebody just shot putting down one of these centers. They blocked it somewhere in Arizona, right? Because of water. So let me stop there.
Laura, yeah.
And let's open it up to questions.
Okay, James has got his hand up first. So go ahead, James, and then we'll go to Rita.
Yeah, I know. I've been hearing that the tech bros want to get Trump to back this whole thing so that they don't have to bear the burden of if everything goes south.
Yeah. That's
what's been talked about lately. And that's what's in this whole thing. They're back to their derivatives again.
Right. Oh yeah, no, this is same story, different day, right? I mean, we've heard this story before. And we'll see. We got to keep an eye on it and see how it goes. There is a piece of good news. Although what that may be changing is the Federal Reserve, ever since the Dodd-Frank Act after the 2008 crisis, they do a report on what they call sort of the risk in the financial system. Yeah. And we don't cover it here very much, but they're watching this stuff. And they are on it, but they are not, I have not heard of them trying to regulate it or call for laws or anything yet, but they are watching it. And I don't know exactly what control they have over private equity, but it isn't the same as they have over a bank. Well, and so there's going to be a lot of weird stuff happening out there. And, I don't know that we'll get back to the good old days of Enron and WorldCom around 2000. Remember all that? The good old days of Enron and off balance sheet financing and all that. But, it rhymes. History rhymes here.
Well, good luck with the man on top.
Right.
He's never going to let that happen.
I'm not holding my breath. I'm not holding my breath. Yeah.
Yeah, right.
To your point, one interesting thing what you said about government subsidizing this is, we've got OpenAI kind of doing all this finance privately, right? This arrangement here. Wait. No.
Yep.
This one. So NVIDIA and Microsoft, the arrow doesn't go for Microsoft, but Microsoft and NVIDIA are big investors in OpenAI. It isn't the government funding it as sort of a skunk works or a Bell Labs or something like that. The government, my understanding, is not putting huge amounts of money into OpenAI, although you guys will have to fact check me on that. But it's mostly privately funded, and that means private bonds are being issued in weird and complicated ways. And along with this whole double counting idea. So the government stepping up to put in some money into this sort of thing. Better, we've got the AI brain than China, but so you could make the argument. I'm sure somebody has, but it's right now. It seems like it's private. It's being done mostly privately. Rita, I saw your hand up, and then I see Chuck after that.
That is correct. Go ahead, Rita. You can unmute.
Okay, so I got into the whole DC scene while I worked for Bell Labs.
Okay.
And quite honestly, as far as a DC center, new centers that are being built, watch them side by side with water treatment plants.
Okay.
All right. So when you were asking about water, more often than not, you're going to see these enormous construction jobs having to do with water treatment. In addition to that, and oddly enough, my family does major construction. There suddenly, in the last 4 years, water treatment plants have just boomed all over the United States. One of the analyses we did when we were planning a new DC center was availability of water. Water quality for those is not equivalent to drinking water, okay? Or population using the water coming out of these centers, out of these treatment centers. So the duality of things is sewage to treatment plant, huge emphasis, then the water treatment and the return from the water, the treated water back to the DCs. This was enormous and had to be planned out literally years in advance. As we're talking AI demand is these enormous DCs. The data centers are now, I mean, I got into everything from the number of rungs in a in a case that's holding all of these servers and the troughs up above that are running them, all the way to the point where the troughs from this particular row now connect into a specific point where they now join into larger cables.
Sure.
I won't even go into all of that.
Yep.
Every one of those is monitored by separate software. So that's where your software comes in. From that software, there's a separate filter that says, here's the data and the type of data coming out of this particular software system. And they are aggregated into different buckets. So keeping it real simple, okay? The DCs require power to run all of those servers. Huge. The cloud is really the exchange place on information, okay? Where are you sending it to? We've had the cloud since we had the first telephone. All right, so understand the cloud is not an amorphic thing. In addition to that, you have water coolant systems. This is what keeps those. You walk into a DC and you freeze, but you get close to the servers and you feel like you just walked into some kind of a desert. I mean, it's unbelievable. So, understanding that these are now huge, because all that AI is doing is something that we used to call them decision engines. What do I need for this? What do I need for? It's picking and choosing based on the question. If you were ever a techie and you knew you had to write exactly the right question to get the right information back, this is all attached to it. And AI is just a decision engine on hyperpower.
Right.
Okay.
You're right.
So coming into this again, the impact is not just on the demand for power, although that's huge. So in a decision of where do we put this DI, we had to have the amount of water that we needed. We had to have the sewage system that we needed, and we had to be located in a power location that was consistent, that was capable, and that wouldn't drag down consumer use. Simple enough?
This is great. No, this is a really helpful thing. Thank you very much.
You're quite welcome.
Yeah, thank you, Rita. Okay, we have Chuck next. Go ahead, Chuck, you can unmute.
Okay, Dave, you said something about if it fails. What do you think would cause it to fail? I mean, I don't know what the
I would think if
expectations
the
are.
AI doesn't work, if the AI doesn't do what it's people think it'll do,
What do
and
they think
there
it'll
just
do? I don't know.
Yeah, I'm curious to see if it'll work. I mean, it seems to be pretty helpful right now. It is a big improvement over search, and you got to try it. If you haven't tried it, you got to do it. And ask it a natural question. And sometimes it'll give you a really bad answer, but Copilot continues to get better. And I ask it pretty detailed economic questions, and usually with a 2 or 3 follow-ups, it'll get the right answer. It'll get to the right context, which is the hard part. It's easy enough to rattle off facts, but to put them in proper context is really hard. And they're still struggling with that. I mean, I measure it by asking them certain tough questions about like which president did better than another. It'll give me the wrong answer, then I tell it to correct. Doing it this way, it will then fix it. So I'm helping. They probably have a guy watching me who's trying to help train their economics model. But they're really cool, and you've got it on your computer. Try Copilot, give it a shot.
I'll have to try it. Yeah.
It's a lot of fun. I've been enjoying it. And it'll answer questions about anything, and you'll be amazed how fast.
I think the gal was just talking about what I imagine as being, it's just basically like ladder logic, all interconnected ladder logic. If this, then what? And if that doesn't work, we'll go somewhere else. If this happens, what, to me, it just sounds like ladder logic. I once complained to somebody that I was getting two mailings every month from somebody. And I said, I think you've got an overlay in there. And she said, oh, no, we don't have AI. We can't fix it. I go, it's just programming. Everybody thinks it's AI that's doing it, but it's just programming, right? I mean,
well, you've seen probably a lot of the same science fiction movies I've seen. I mean, you can see what the possible uses of something like this, certainly in the military. Pilotless aircraft, the cars that drive themselves. I mean, there is a lot of different applications for this thing beyond even I've started to think about. Just pick your favorite sci-fi movie and what the computer's doing in there, and that's what they're working on. I remember, you remember the original Star Trek where they would have the cassette tape, and they'd put it into the computer. This is the first, the original series.
Yeah.
And they'd ask the computer, they'd say, computer, do this, and it would say working, and then it would give them the answer, right? But that's what this thing will do, but fast. I mean, it's like rocket fast. It's crazy.
Oh, David, wait for quantum AI. Ooh.
Well,
anyway.
I spend little time in the tech bro space, as you probably could tell from what I just presented. I'm in more of the accounting side of it, but it's fascinating to see how all this is coming together and how these different sort of competitive chains are battling each other and the strategies they're using. We didn't spend a lot of time on that, but I spent an afternoon nonstop trying to build this template out, trying to figure out, because I didn't know where I was headed, trying to figure out where, how are the different entities competing with each other, and what's the right framework for thinking about it. Give me it came up with these column headers and these chains of competitors. So it just takes time. You keep asking it the question, and it makes you think a little more. I mean, it's, and anyway, we got a couple other questions.
Yes.
Garrick?
And yeah, Rita might have a response.
Oh, Rita got it first? All right, go, Rita.
Yeah. Go ahead, Rita.
Hey, when you're talking about AI failure will hit everything. So whether it's the FAA needs data like you wouldn't believe, every airport. You have an AI failure, you're automatically going to stop all flights or interfere with flights. AI covers everything with financial. The whole financial sector is built off of AI. That's how you do forecasting. You do a number of different things. Healthcare, you name it, in our lives, AI is touching it and has been touching it for a long time. This is not a new concept. We were dealing with it back in the 90s, believe it or not, all the way back in the 90s. And so the requirements came up. Now, where's the point of failure? It could be electric grid. It could be in that water supply. It could be in a number of different things. I remember when we had data centers in Virginia that went down because of flooding due to a hurricane that hit that area. It was unfortunate, but that's what it was.
Plenty of water.
Exactly.
You're talking about physical
plenty
failure.
of water, but
Not
it's
the
sitting
right
on
kind
the
of water.
ground. And unfortunately, the groundwater doesn't get processed through those plants that I told you about earlier. So the whole thing is a matter of we're shifting the whole job location. What we had for warehouses, what we had for manufacturing, this is what Clinton sort of hinted about when he said, we're moving into services. AI is a service. Okay. Yeah. The numbers of people that it takes to run because it's a 24/7 operation, to run a DC that is so massive, especially a super center, is in the thousands. So understand that there is a shift.
Yep.
Yeah.
So that's why that's why right now it's impacting, or it seems to be impacting just about everything. It is a shift, and here's the good news. Our our younger generations are very used to tech. So are they going to be able to do these things? Yes, not a problem.
Wow, yeah. I guess groundwater flooding and electric just don't mix.
No, they don't. And every single one of those water processing plants have backup and emergency plans. The issue is more in the electric networks. The electric networks are very fragile.
Thank you, Rita. And now we have Garrick. Go ahead, Garrick. What you got?
Thank you, Deb. Thank you, David, for your presentation tonight. I'm very concerned. The first part of your presentation was economics and affordability, and Bill during halftime spoke of affordability. And now with what you're presented with AI, I'm very concerned for the future of our young people. It was in the news the other day, Waymo, I don't even know the company. It's a robotic taxi service or whatever. They were involved in some accidents. And I guess my point is, and my question to follow up with is AI going to, in 5 years, I'm just asking you to project, say 5 years from now, is AI going to be so prevalent in our economic system such that millions of people are going to lose jobs? And how is that going to affect the livelihood of everyday Americans, not to mention the basic problem of affordability today?
Have you seen the movie Wall-E by
No,
chance?
I haven't.
There's a scene in there where
No.
basically the ship takes care of all the people's needs. Like nobody works. Everybody's got 100% leisure time. The robots take care of everyone, and every human is gigantic fat. We just sit on the chairs and we're enormously huge. I don't know what that future is going to be. I will tell you this: every historical technological improvement has resulted in more jobs rather than less, pretty much. Now, that doesn't mean that they won't be different jobs. Like we used to be big on agriculture and then that went away. And we were big on manufacturing and that's gone away. And now we're on services and maybe some of that will go away in terms of these data centers. What's after that? I don't know. And you hope that our colleges and our trade schools will teach people for whatever skill is needed to use AIs to help people be better. There are going to be an enormous number of jobs created there. So it would be different than history if this thing replaced an enormous number of jobs. Now, if it did, then you would almost have to have a progressive type leadership where the people that are still working would be paying an enormous amount in taxes, and the government would be covering a lot of other things. Also, robots would be covering things. For example, we would probably all be on food stamps, meaning that robots would create our food supply for us and give it to us. We would pick it up in the grocery store and, swipe our card or our phone or whatever else. And so there are some things that, even though you might have fewer people working, you'd have robots working in places where people used to be, and then stuff would be free. That's a science fiction future. I don't know if that's going to happen, but that is certainly a path that we could be on. Now, I don't want to deal with robots that don't have a really obvious off switch on them. Like I've seen the movie Terminator many times. I don't want to deal with them if they don't have an off switch. And I don't know to what extent we've really thought through that. So so many things that could happen. I don't know. And one thing I will do is I'll start looking into this a little bit and see what sort of our best economists are saying about it and start sharing some of that information. But the stuff I've seen so far is more scary, and I don't see the path from here to there. And they might say, well, all these jobs will be gone. It's like, well, yeah, but what about the fact that we'll all be given free food and free stuff, So, if the world were truly automated, then you have a Wall-E scenario of we all just live leisure, we're on leisure time, and the robots do everything for us, and they fix themselves, and all is well until they decide to get rid of us. Then they better have a big off switch.
Parameters
what
are
you-
needed too. Yeah.
With what you just said, can we possibly think the people like Elon Musk and the powers to be would go down that road where we've become so technologically advanced that they would be willing to let the working bees sustain life?
Yeah.
And I'm very concerned that that's not where we're going to go.
Right.
I'm very concerned that these oligarchs really want to thin the population, and eliminating jobs. People are going to die, and we're seeing it right now with health insurance. People are going to die. The oligarchs are in control, and now they're in control of AI. And I am very concerned about super intelligence AI.
Oh yeah. No, it's a scary idea, and we definitely don't have any reason to believe our leadership is thoughtful on this subject.
No.
I mean, if Obama were president, I think we'd be having thoughtful discussions around this stuff instead of about tariffs and punishing immigrants and all this other nonsense. It's the opportunity cost of Trump is something people don't always think about. Is what would we be doing if we weren't spending all the time, shooting ourselves in the foot? If we were actually thinking about the future and the questions that you brought up,
Well, thank you, David. And I'm very concerned also with there's no guardrails right now.
Yeah.
It's moving.
It is 9.
The metal, and there's no guardrails.
No, it's
Andrew.
going to be interesting. We live in interesting times. It is 9:38. I want to adjourn this and say thank you to everybody. We will be here next month. You can, if you have things you would like us to talk about, you can always send email to Carl or me or Bill, whomever you're comfortable with, and we will try to work it in. So, thanks again.
Remember Andrew Yang? Andrew Yang ran for president in 2017. Remember him?
I don't very well. Sorry.
He addressed this when he ran for president.
Okay.
Yeah.
All right. So thank you, Debbie. Do you want to stop the recording, or
Bill?
Is Bill still here?
Yeah, he appears to be.
He's lurking in the background. He's plotting.